Assalamu alaikum, everyone. I hope you are doing well. Today is Thursday, April 10th, and it appears that the final matchup between the United States and China is taking shape, and the markets are kind of nervous about this, understandably so. China and the US are number two and number one in terms of size of economies globally. And so it makes sense for the market to be very concerned about the trade war that is going on between these two countries. This was a trade war that was completely unnecessary. It was completely unforced error by the Trump administration, and yet here we are. It's something that the administration is going to have to deal with. The world is going to have to deal with. And we are really in very, very historic times. I mean, we look at some of the charts that I'm going to show you. Uh, Unprecedented, really, in terms of what we're seeing, and it's creating a lot of opportunities. To be honest, in the market, there's a lot of names out there that are really cheap. I mean, to be honest, yesterday when we got the rally, I didn't really think that I I I had a hunch that we'd pull back today, but I didn't think we would pull back this much. Now, in hindsight, you know, perhaps things were uh, a lot more predictable because if you think about it, yesterday morning when markets opened, pessimism was at its peak. And then the tweet from the administration about the 90-day pause on tariffs is what changed everything. And so you can imagine there were a lot of short sellers, a lot of leverage traders betting on the market going down who were caught off sides after that tweet was tweeted out, and it really amplified the move upwards to a very big degree. And so, perhaps even more than what the actual optimism in the market suggested the rebound should have been for, and therefore today was just a repricing back down. Nevertheless, we don't really worry about that. We continue to nibble on the names that we think are undervalued and continuing our strategy, being cautious, not necessarily backing up the truck because we know that we're in very volatile times and things are liable to change in a tweet. And therefore, we have to make sure that we're being cautious, but at the same time, taking advantage of what the market is putting in front of us. So I did mention yesterday, I was asked about the CPI. I thought it was going to be cooler and a good number, and in fact, we got that. And in fact, we got a number that we haven't seen since 2021, which is fantastic. It really sort of completes the narrative needed for the Fed to actually get started cutting interest rates, and that should be good for risk assets. And we actually saw that the probability for an interest rate cut increased from 20% to close to 25% between yesterday and today. This is with regards to the May meeting. So that's all good for risk assets. And yet, risk assets didn't really care today because of what's going on between China and the United States. The Dow tumbled 1,000 points, which, if you asked me 6 months ago, that's terrible. But considering what we've been through in the last week, that's not too bad. I mean, we gave back half of the gains that we got yesterday. But under Trump's administration, that's just par for the course. And we got a pretty red day in the market overall, regardless of sector, with exception to consumer defensive, which was a bit greener. But Tesla was up 20% yesterday. It's down 7% today. Apple was up 18% yesterday, down 4% today. So definitely, substantially down. But again, considering where we were or the course that we've been on in the last week since Liberation Day, which should probably be named something else, maybe Ruination Day or Catastrophe Day or something like that. Since Liberation Day, this is just another day in the market. VIX is up to 40, which is not its peak in the last week. I mean, we've been higher, but if you look at the chart here in terms of the fear index or the VIX, hasn't really been at these elevated levels above 40 except when we had the coronavirus in 2020 and the great financial crisis 2008, 2009. So we are, as I mentioned at the outset, we are in very historic times right now, will be remembered for many years to come. And during these historic times, it's really when best opportunities present themselves. Gold printed another. I thought this was going to be the chart for Bitcoin, ends up being the chart for gold. So my apologies to everyone who I called a boomer, who, who was talking about gold and singing its praises. Gold has printed another all-time high. It's now 3160. And this corresponds with what we know about the relationship between the fear index and gold. When fear index rises, so does gold. It is a safe haven asset, risk off asset, and there's a lot of uncertainty in the market. Investors don't really know what's going to happen between China and the United States, so it makes sense for gold to go up. The US dollar index has just fallen off a cliff. This is actually good for risk assets for a number of reasons. Obviously, for American assets, makes it cheaper for to buy. However, it's also good for other economies because it allows them to print more money because they if the dollar is strengthening, they don't want to devalue their currency by a lot. But if the dollar is weakening, then they have some leeway in order to print more and introduce more liquidity into their economies. And so this kind of tells me that the general direction of liquidity globally is going to be upwards for the next few months, and that's good for risk assets. Generally, it's good for something like Bitcoin for sure. Yeah, even though Bitcoin has not really, had the type of run that gold has had, it has displayed some remarkable resilience. When you're comparing it to, some of the major tech stocks that have been staples in their respective indices. U.S. Treasury, and this is really what caused Trump to fold yesterday, as the interest rates, the yields on the 10-year, on the 30-year, they were rising, probably because China was dumping U.S. debt, and probably additionally because of leverage traders being caught offside. But the U.S. Treasury yields have not fallen. This is something that is of concern for the U.S. administration. They kind of revealed their hand yesterday in terms of what they can't have happen and what is unacceptable. It did sort of appear that markets going down, that was something that they were willing to have patience on, but treasury yields rising is where they kind of drew the line and decided to change course. So perhaps continued pressure from treasury yields will cause the US administration to soften its stance on China and start being a bit more reasonable. I mean, right now tariffs on Chinese goods are 145%. That's just going to end trade in for most products between China and the United States. So that needs to be resolved, and perhaps this treasury yield rise is a blessing in disguise. Will cause the U.S. administration to kind of prioritize making a deal, because I know the Chinese want it. They really need it to happen. Their economy was not as healthy as the U.S. economy before this happened, and perhaps because the U.S. administration revealed their hand yesterday with regards to the importance of treasury yields to them, perhaps this will cause China to ratchet up the pressure on treasury yields by selling more and more of its U.S. debt, which it has, I think, close to almost $1 trillion in U.S. debt. So it can really raise yields here in a big way if it chooses to do so. And it's reaching out to other countries to try and see if it can strike deals with them and try and see if it can wane its dependence um, on the United States. But I think that both the US and China are going to discover that they really can't do without one another. I think they're going to discover that, both have a lot of pretty strong cards to play, and they need one another. I'm hoping this is the conclusion that they arrive at. As I said yesterday, I do think that a complete severing of trade ties between the United States and China will increase the probability of an armed conflict between these two countries, and I don't think anyone wants that. I mean, it risks the future of humanity itself. So I I, I think both countries coming to the realization that they need to work together is in humanity's best interests, and that's kind of what I'm hoping for. That being said, our strategy as PIF is the same. We're dollar cost averaging into our favorite names. You saw me um, do that yesterday and today. I think, for example, BitDeer. I have a full position now in BitDeer for our PIF portfolios, and I'm going to start moving down our watch list and making sure that I have full positions in each of the top names that we have there, and maybe even establish some positions in some of those new names that we've added because they're looking ripe for the picking at this point, and we'll continue to do that. And to be honest, if this goes on for a few more weeks and we're able to sort of get to the positions that we want to get to for each of our favorite names, I wouldn't mind that much because we're halal-conscious investors. We're not dealing with leverage. We're not dealing with derivatives. No one forces us to sell if we don't want to sell, and so we are in charge of our own destiny here, inshallah. And that puts us in a privileged position to do very well in the future, inshallah. With that being said, let's go to questions very quickly. Salam Usama, it's nice to see you. Salam Rashan, I see you. Lol, we only use Heinz, American product. It's funny. Malik says, Salam Rakaan, do you still see Tesla hitting the 700 mark end of year? You'll be surprised, but I actually do. I think it'll end the year with a seven handle, but we'll see. What do you make of EU China negotiating to abolish tariffs? I mean, that should kind of, I mean, it's kind of like, America had this good friend in the EU and it was treating it badly. It treated the EU badly for no good reason. I mean, they keep complaining about the VAT tax that the EU has, but the VAT tax is on all products. It's not just on American products. Um, so it wasn't unfairly, disadvantaging this uh, advantaging, is that a word? Disadvantaging the American products. It was on all products, so I mean, it was a level playing field, and the EU was, really considered the United States to be a close ally to it, and this administration doesn't see it that way, and it kind of uh, didn't put much importance on the alliance that it had with the EU and its members. And so, maybe EU and China talking will get the United States to rethink the importance of its relationship with the EU and, start treating them better because I felt that the way the US administration treated Europeans was insulting and to Europeans and uh, just unfair. And so I think that maybe this EU China negotiation will cause the US administration to rethink. It should have a zero for zero, I think, trade relationship with the EU. There's no reason not to. The fact of the matter is trade is enriching for both sides. If I have something that you want, you have something that I want, and we trade, then we're both better off after the trade. No one took advantage of the other, assuming things were traded with proper disclosure of what actually is being traded, and just common sense in terms of you know uh, fairness there. But if nothing was hidden and people knew what they were getting into and they traded two products, then each side is now better off. And so this entire notion that the deficits that we had with different countries were e- evidence that these countries were treating us badly is just asinine and moronic. What do you make of EU China negotiating to abolish tariffs on Chinese cars and impact on Tesla? I know Tesla is not cars only, but surely it'll dent its car business. Well, keep in mind Tesla does have a factory in Germany, and it will probably have additional factories in Europe, and the same with China. It does have factories in China, so there's a way for Tesla is a lot closer than any other car company in the United States to avoiding tariffs, both that China might impose and also that the EU might impose by manufacturing in those respective places. Hey, Salam Suhail, nice to see you. Salam Haroon. It is a bloodbath today, yes, but as I mentioned, I mean, compared to what we've experienced in the last week, just another Thursday, I guess. What do you think of Rivian? It's not the top of breed for me, so although it's a good company, but um, car business, very very tough business. It's one of those hard ways to make money. You know how I always say there are easy ways to make money. There are hard ways to make money. Manufacturing cars is a very hard way to make money. If Tesla was only in the business of manufacturing cars, I would not own a single share of Tesla. Why I own Tesla includes, full self-driving, which is basically a software business, and then, the robotaxi business that can be attached to that. Obviously, energy, very good margins there, and then you have robots and the multi-trillion-dollar industry that presents. And so that's really why I'm in Tesla, not for the manufacturing of cars itself having really poor margins compared to other businesses. And Rivian is basically a company that just manufactures cars. Salamat, is that AI or Al? Anyways, Salam, brother. Given the recent market shifts, are there any new stocks that have become particularly attractive? I mean, Tempest AI was one that we, had on our watch list. It's on our short list, so maybe we'll add it soon. Salamat, Dr. Khalid. Nice to see you. Salam, Dr. Midas. Do you think China's selling U.S. debt to drive up bond yields, reducing U.S. government fiscal firepower? Yeah, yeah, absolutely. I think China was may have been doing that, and I mean, if you start a trade war with someone, I mean, what do you expect? They're not going to do things. I mean, charging them a 145% tariff. They're not going to necessarily think about what's in your best interest. They're going to try and punish you. That's what the Chinese did, and it worked. How do you see this resolving itself? I think hopefully they'll sit down, they'll get a deal done. Like I said, both countries need one another. I think eventually they should sit down and figure something out. Bahat says, "How long do you think before Trump makes the art of the deal with China?" I don't know how long it's going to take, but um, I think both sides have ways to pressure the other. When do you plan to start pivoting away from U.S. stocks? I think major pivots away from U.S. stocks will probably be in the next maybe 2 or 3 years. But I do see myself more focused on U.S. stocks in the next 12 to 24 months at least. I mean, the United States still has the best companies in the world. That's just a fact. And the best companies in the world do trade on U.S. stock exchanges. That's just a fact. So our focus will be on companies that trade on U.S. stock exchanges for the most part, which includes U.S. companies. It also includes other companies as well, that like non-U.S. companies. So that will remain our focus until that changes, until um, until the best companies in the world are no longer traded on U.S. exchanges, then um, our approach will change. With that being said, leave a like, guys. Love you all. Hope you're enjoying this show, the greatest show on earth, which is financial markets. Until next time, make sure to take care of yourself. Assalamu alaikum, and peace be upon you all.